tell you that I'm rushing as fast as I can to get everything as completed as I can, because it could happen anytime. That's how fragile this system is. Honestly, it could happen anytime.
Welcome to Silver News Daily, your ultimate destination for all things precious metals. If you're passionate about the glimmer of silver and the world of precious metals, you're in the right place. By hitting that magical subscribe button, you're joining a community of like-minded thinkers who see the potential of silver and precious metals shaping the future. Buckle up, because we're diving headfirst into the latest news and updates.
As we find ourselves enveloped by the rich tapestry of autumn colors, a captivating narrative is emerging in the world of finance. Gold, a metal that has for centuries been a bedrock of stability, is now at the cusp of a significant transition. Experts forecast that its price could rise to a staggering $3,000 per ounce this coming October. But hold on, before you run to the comments and call me crazy, please hear me out. This news might change your life. Now, such a prediction may be surprising to some, especially given that gold's journey this year has been characterized by a modest rise of just 6%. Yet, when we dig deeper, underlying currents hint at a landscape that is rapidly changing. There are geopolitical developments, economic trends, and market sentiments that could be paving the way for this golden ascent. To dissect these elements, we'll analyze the year-to-date performance, delve into the nuances of market dynamics, and speak with industry insiders to get a comprehensive picture of what lies ahead. The story of gold is not just about numbers. It's about global shifts, about history in the making, so let's embark on this exploration together. Gold, often referred to as the yellow metal, possesses a fascinating history, one that is rich, diverse, and intertwined with the fate of civilizations. Since the days of ancient Egypt, where it was venerated and considered the flesh of gods, to its role in backing the global economy in the 20th century, gold has always held sway over the imaginations and economies of societies worldwide. 2013 marked a pivotal point for gold. From that year, a series of financial crises, starting with the U.S. Federal Reserve taper tantrum, initiated a roller coaster ride for its prices. Fast forward to 2018, and we saw gold grappling with fluctuating demand, turbulent geopolitical events, and an unpredictable economic landscape. Yet, its intrinsic value remained unchallenged. The past 5 years, however, have been particularly telling, with central banks becoming net buyers and increased consumer demand in regions like Asia. Gold began to reassert its prominence in the financial world. This surge was not just a reaction to the market's whims. It was a reflection of deeper societal shifts, from technological advancements in sectors like electronics, where gold plays a pivotal role, to a rising middle class and emerging economies keen on gold jewelry and investments. But 2023 stands out. Despite the modest 6% increase this year, experts predict a sharp ascent in the coming months. The whispers of a looming $3,000 price point per ounce are becoming louder, and the world is waiting with bated breath. In our next segment, we will examine the factors driving this anticipated surge and the potential implications for investors, economies, and, indeed, our world at large. Gold's value transcends its ornamental appeal. Its significance is profoundly embedded in real-world applications and its steadfast position as a buffer against economic tumult. As we sail through 2023, a confluence of factors are shaping the bullish trajectory of gold prices, solidifying its status as the quintessential safe haven asset. The global economic landscape over the past decade has been punctuated by intermittent shocks, ranging from intricate trade wars to unsettling debt crises within pivotal economies. Such abrupt disturbances in the financial equilibrium often spur investors to gravitate towards assets that promise stability. Gold, bolstered by its unwavering reputation spanning centuries, naturally emerges as an investor favorite in these times. Another compelling dynamic is the behavior of central banks, particularly those nestled in emerging economies. These financial powerhouses have been noticeably bullish about accumulating gold. Their overarching strategy hinges on diversifying their reserves, aiming to diminish their dependence on the US dollar. As central banks intensify their gold acquisition efforts, the resultant demand surge invariably provides upward thrust to gold prices. Concurrently, there's a palpable undercurrent of anxiety about burgeoning inflationary pressures. The world's economic machineries have been vigorously churning out capital to counteract recent adversities, leading to legitimate concerns over inflation. Gold, with its storied past, has consistently been a beacon for those seeking to hedge against inflationary winds, making it an increasingly attractive proposition in today's climate. Beyond the realm of finance and economics, gold finds itself as an indispensable ally to the technological sector. Its presence is ubiquitous, from the heart of our everyday smartphones to intricate medical equipment. As technological advancements show no signs of plateauing, the demand for gold in this domain is predicted to maintain its robust momentum. Culturally too, gold's allure remains untarnished. In populous nations like India and China, gold isn't merely an asset, it's an intrinsic part of their societal fabric. As these nations witness a surge in their affluent populace, their inherent inclination towards gold is amplified, driving global demand. On the geopolitical front, the world isn't bereft of tensions. From territorial contentions to impending energy crises, the world grapples with a spectrum of uncertainties. During such volatile phases, the global investor community often seeks refuge in gold, viewing it as a bulwark against geopolitical unpredictabilities. Lastly, the narrative of supply cannot be overlooked. The endeavor to mine gold is fraught with complexities. Premium deposits are increasingly elusive, and the environmental ramifications of gold mining are under heightened scrutiny. This dynamic of constrained supply against a backdrop of soaring demand is an undoubted catalyst for rising prices. In essence, while the ascent of gold prices by 6% in 2023 may seem subdued, it's the synergy of these myriad factors that sets the stage for a pronounced gold bull run. The confluence of investors, policymakers, and economic analysts are all fixated on this domain, bracing for the golden tide that's on the horizon. Gold's ascent to higher price points, driven by the aforementioned factors, has repercussions that cascade through various facets of the global economy. Here's a nuanced understanding of the potential consequences and implications of this sustained uptrend. First and foremost, the strength of gold is often viewed in contrast to the US dollar. As gold prices rise, it can, at times, hint at a diminishing confidence in the US currency. This isn't just a reflection of gold's traditional role as a safe haven asset, but also an indication of the potential relative weakness of the dollar against other major currencies. Such a scenario could manifest in myriad ways, ranging from influencing US trade balances to impacting global commodities priced in dollars. Secondly, for countries heavily invested in gold mining and export, a gold bull run can be a harbinger of economic boon. Nations like South Africa, Australia, and Russia stand to benefit from soaring gold prices. This has the potential to bolster their national GDP, foster job creation in the mining sector, and subsequently stimulate their domestic economies. Conversely, for countries that are net importers of gold, like India, rising prices might exacerbate trade deficits. A prolonged gold bull run also has implications for individual investors. While seasoned investors might revel in the appreciating value of their gold assets, for those considering entering the gold market, the barriers become steeper. It becomes essential for potential investors to exercise caution, ensuring they aren't buying at peak prices only to witness a potential correction later. Next to react will be central banks and national economies. As gold prices rise, central banks will begin stockpiling their gold reserves, as it not only strengthens their foreign exchange, but also offers a hedge against volatile fiat currencies. Reviewing their interest rate policies, especially if they observe gold draining capital away from traditional investment avenues, ensuring that their country's mining practices are sustainable, given the increased global scrutiny around environmental concerns. This will give them massive influence over the markets. Then we'll see jewelry and tech industries that use gold as a primary component start to face challenges. The jewelry industry, particularly in countries like India, might see a decrease in consumer demand due to high prices. Crafting innovative marketing strategies and offering alternative payment or investment plans can help in retaining customers. Tech companies using gold in electronics might capitalize by increasing the industry average price for their products, potentially increasing revenue due to the gold rush. Now you might be thinking, where do I fit in all of this? I'm not a corporation, country, or bank. How can I get rich from this huge wealth transfer? For individuals, the primary goal often revolves around wealth preservation and potential growth. During a gold bull run, it's tempting to make impulsive sales just so you can cash out early, but it's crucial to maintain discipline and patience. Gold and silver should be a significant part of one's portfolio, and it should also complement other assets like stocks, bonds, and real estate. It's beneficial to incrementally invest in gold, practicing a strategy akin to dollar cost averaging. This means buying a fixed dollar amount of gold at regular intervals irrespective of its price. Always be wary of buying at the peak. While timing the market is challenging, being informed and consulting financial advisors is necessary in making prudent decisions. Drawing together all the threads of our discussion, several indicators suggest that this October could be the threshold of a significant gold bull run. The intricate dance of macroeconomic factors, from rising inflation rates to geopolitical tensions, combined with patterns of investor behavior, points to a potential surge in gold demand. Moreover, historical data emphasizes the cyclic nature of gold prices, hinting at an imminent upward trajectory. However, while the signs are auspicious, it's essential to remember the ever-present unpredictability of markets. Factors beyond our current comprehension or sudden global events can always sway the dynamics. Therefore, if you found this analysis enlightening and wish to keep abreast of such insights, please subscribe to our channel. However, a word of caution: this is not investment advice. Before making any investment decisions, especially in volatile assets like gold, always consult with a financial